Hey everybody, this is Spooky's Revenge, and we are on episode 2 now of the Rags to Riches $500 5-year series. So, just wanted to provide a quick update. Yesterday I was a little too busy, I didn't get to make a video. It was also kind of a weird day in the market, and I didn't really do much. I did buy, I think I bought 2 stocks, and I realized $1.73 in losses. They just went sideways, and I didn't want to deal with it. One of them hit stop loss. It was a 4.4% loss. Really insignificant. It was a small position, so not too worried about it. Today we're just kind of watching what the market does. We have the Fed numbers coming out. We got a few things going on this week. So again, it's not anything we really have to worry too much about because we're taking the majority of our capital and putting it into longer term investing. So that takes a lot of the stress out of the short term speculative stuff. So we can focus on developing our skill set, our portfolio, our discipline, all that good stuff without having to worry about, watching charts all day and becoming a slave to the market. Because the goal of this is not to switch one job for another job. The goal of this is to take the money that you earn from a job, put it into the passive income compounding growth vehicles so that money can then work for you instead of you having to work for more money to offset that income. And then you can gradually replace the passive income, the passive dividends, and use those tax leverages and all that good stuff that we teach. And then that replaces your hourly wage, and then you have more financial freedom in life and opportunities. So one of the most common mistakes newer traders make when they go full time is they just throw everything in the market and, whatever sticks, sticks. They don't think about long-term passive growth. They don't think about tax time, and that's usually what hurts most new traders. So by doing this, we're setting ourselves up to preserve the majority of our money, make consistent contributions while we're still working or making money in other areas, and then taking those smaller portions and trading with those once we've developed a sufficient skill set to make consistent profits. That doesn't mean every single trade is going to be a winner. It just means that every single trade should be successful, and we're going to have profitable trades. We're going to have non-profitable trades, but the goal is to lose successfully if we're going to. We talked about the paradox of choice pretty in depth yesterday in the Discord. I went on for, I want to say it's about 45 minutes, as well as some ways to counteract that. And one of those is fear setting, which is where you prioritize the worst case scenario for any set of decisions that you have to make and try to whittle those options that you have to choose from down into a few reasonable ones. And then you make your best decisions based on those. So that's all we're doing really with the portfolio here. We're just making consistent contributions. We're not jumping into anything crazy. We're just putting, stuff in passive, relatively safe, stable stuff. And then we're taking a smaller piece of that and just kind of using that to trade and kind of speed up the process. It is not the other way around. We're not doing the active trading with the bulk of our capital. We've done that. We've had these small account challenges. We blow them up to pretty good sizes, trim them down, blow them up. Pretty good sizes, but you guys don't really see what happens to those profits that we trim on those accounts. We just put those into more passive growth. So that's all I'm going to do on this one. I'm just going to share it on one account so you guys can see it all over time. So we're going to start with $500 and we're just going to make those consistent contributions and just watch this sucker grow. All right, so let's get into it. Let me just hide my face, and also a couple points that I just from a production quality standpoint. These settings on this camera kind of make my skin look like crap. I promise I don't look like a bruised apple. It's just a weird filter thing. I don't know how to turn it off. I think it's probably just contrast or something. But my blacks are also lifted, so I don't know. It's weird. Like this area here in the headphones has like a grayish tint to it. So I don't know. I'll look into it. But yeah, so I also, sorry. I also tend to look down a lot, and that's not because I'm depressed or trying to avoid eye contact. I like looking at you. I like having a staring contest with you, and I like thinking about you. But I need to also see my keyboard, and it's on the other side of this microphone. So, all right, let me hide my face. And here's the account. So right now, we can see that we currently have open holdings of about $5.36. It's just 1% of the portfolio so far. And most that's just drawdown with the larger stuff. So we've got $324 in Johnson & Johnson, and it is currently down 1%, which is pretty close representative of the portfolio net worth, because we're putting the bulk of the portfolio into larger positions with passive growth. So when Johnson & Johnson moves up, we should see the portfolio move up, because that will drag up the overall P&L so far. I haven't placed any active trades today, but I do have a position left over from IOVA. It hasn't quite hit the stop loss yet. That was, again, it was a day trade from our PB light section, and I just held on to it because I do still like this setup. We got a higher low forming. We just got to validate it. If I look at the 5-minute chart here, we can see some pretty impressive strength today. So maybe it'll push up before the end of the day. And then I also have the two swings. I have KLXE, which if I kick this up to the 1 hour, you can see we're just still kind of hovering in this area. We have this local support here. We're showing a little bit of weakness, but as long as the volume can come in and pick up off of here, I think we should be fine. We really just need to break over these highs and push up over $13, and then we should see our targets pretty easily. So $13.54 is the first target, and then all the way up here, $17.58 is the second target. So again, if I'm looking at the higher time frames here, we had that resistance trendline break, divergence setup, BAC off a retest of support, and we're holding higher support so far. So far so good. We're right in alignment with this trend line here off of the that divergence break. So I'm not too worried about this position yet, but it's always good to keep an eye on them. And then for 9, we're kind of doing the same thing, right? It's almost a mirror setup. We had a resistance trendline break, divergence setup, a retest, and a push, and then we had this BAC right here off of this test of these local highs. So still okay so far. I'm not gonna panic over a little bit of volatility, but it doesn't mean we want to be foolish. So these positions are reduced. There's only 2 shares in each, and that's just because I need to keep them open for tracking my open alerts in the bot. So okay. So looking at IOVA, we're kind of in this channel, this momentum channel here. So there is plenty of potential for us to just keep pushing on that. We just got to break over the $6 level again, and then I think we'll be all right on that one. Okay, so what we should discuss, since it is the 20th, it's September 20th, I want to talk about the next steps, okay? So we've got, let me just pull up the spreadsheet here, okay? So this next month, on October 1st or around October 1st, I have to wait for the funds to deposit and then settle. I'm not just going to add like 20,000 to this account. I'm going to do it according to this schedule. So on or around October 1st, I'm going to deposit another $500. Okay. That will bring the total contribution value up to $1,000. So the portfolio value will show $1,000 plus or minus any P&L. I should also receive a monthly payment from our JEPQ because that is a monthly payout on that dividend. So this leaves me with a roughly $700 allocation for investments and a $300 allocation for speculative trades. So any excess of this $300, I'm just going to put in the investment stuff. So that kind of makes it very easy for me to plan out my trades and stuff when I buy positions. So if the account's up to like, I don't know, $1,200 or something, just say I trade something and it blasts, right? And I lock those profits in. I'm still only going to actively trade or speculate with $300 of it. So this investment allotment will get bigger, of course, but my speculative allotment will still only be $300, okay, maximum, until I make profits on top of that, obviously. Which means that since I'm on this cash account and I'm rotating 33% per day, I will have a $100 amount for speculative trades. Now, in this case, I'm holding a position in IOVA. I'm holding that longer than 1 day, which means that when I sell this, I'm still going to have to wait for those funds to settle 2 days after that. But since I'm not really trading anything today or yesterday, I don't have to worry about it because I still have money freed up in the settled cash department since I haven't sold anything within the last 2 days. So if I want to trade today, I can. If I want to trade tomorrow, I can. I don't have to. If I sell this, I'll have to wait 2 days for those funds to settle, and I still have cash to trade with. So I'm not too worried about it. I know a lot of people tend to get concerned when it comes to these cash accounts and settled funds and rolling at 33% if they do hold a day trade into a swing, but you don't have to worry about that. As long as you only use that 33% per day maximum and you have settled funds whenever you want to trade. Just don't make it more complicated than it is. And one of the best things you can do to avoid having it be complicated is just don't trade anything on unsettled funds and you'll be good. All right. So with that said, this will be in effect October 1st. And again, if you're taking pathway number 2, you wouldn't be limited by that $500 accession yet. So you'd still just be in alignment with what you have here. Okay. So that's enough for that. Let me go ahead and pull up the next item that I want to look at. So it's not a Snickers ad on FinViz, I promise. All right, so the next item that I want to look to add to this portfolio is SCHD, okay? And the reason I prioritize buying 2 shares of JEPQ and 2 shares of Johnson & Johnson are because of their payouts. They're just high yield. They're very good dividend stocks in my opinion, so I wanted these first. I wanted a couple of them. So the next step here is going to be to incorporate another dividend yield into the portfolio. So in this case, this is the Schwab ETF, and it's one of the most popular dividend ETFs out there, and we'll see why in a moment. But it's relatively affordable. It's still under $100. So since I have $700 to invest, and $350 of that is already consumed by the JEPQ and the Johnson & Johnson, that means I'll have roughly $350 to invest this coming month. So I plan to add some to each of those. But I want to buy at least 2 of SCHD, which means I'll have about $200 to put into JEPQ and Johnson & Johnson. Now, things might change, right? But until that change happens, that means I'll probably be able to get 1 of each and then add 2 of these SCHD. So that's the intent. Now, of course, that's a little bit over that $350 or $700 total investment allocation, which means that I'll need to use some of these profits that I have for that, which is okay because I'm capping myself at that $300 speculative allocation, so I don't have to worry about it. I'm all set up for next month already. I don't have to trade anymore. All right. So this is the daily chart for SCHD. I also have it down here on the 1 hour, but let's look at that daily chart. So what we can see right here is we got a nice little channel here where the price just likes to bounce around and kind of choose direction. Okay, so as a speculative trade or a long-term investment, this is a really nice area for the price to potentially continue to push higher. But you can see for the most part, this behaves kind of just like any other ETF. It just kind of goes with the market, and that's because of the way it's weighted. It's got pretty good holdings breakup. So if I'm speculating this, let me look at the options chain. There are options on this, but I don't like trading them. It's very low volume, so you're not really going to get much in the way of options trade. So we're going to treat this like a dividend investment, okay? So let's go ahead and look at the way that one breaks up. And so here's the stock analysis breakdown for SCHD. It's the Schwab US Dividend Equity ETF, okay? If we look at the overview here, we can see it's worth roughly $48.301 billion. We see it's got a low expense ratio, a pretty moderate PE ratio. Typically you want this to be above 15. Pretty low float for a $48.31 billion holding. So I'm okay with that because that means that with a little bit of volume, obviously it's got potential to move, and we're in an area that's pretty sweet real estate. So it's got a $2.60 TTM dividend, and it's got a yield of 3.56%, which I am A-okay with. Ex-dividend date was June 21st, so we should have one come out pretty soon. Let's look at the dividends here. We can see that this is a quarterly payout. Okay. So if we look at the dates here, we got every 3rd month, it looks like. So March is the 3rd month, June is the 6th month, September is the 9th month of the year, December is the 12th month. So 3, 6, 9, 12, just like quad witching. And it looks to be around the middle to the end of the month anyway, so we'll see. I might have missed the boat for this month. It might be like tomorrow. And if that's the case, it's okay, because we'll just catch the dividend in December. But the goal is for us to have it in the portfolio. I'm not going to go out of my way and buy it early just to have it. Okay, so looking at the dividend yield annually is $2.60. That's not huge, but it is a 3.56% dividend yield, and for the price of $70-something, that's a pretty good annual dividend in my opinion, and I could just load up on these over time. Payout ratio is 49.35%, and that just means that 49.35% of the profits are paid out in dividends. So this is a very good payout ratio because it means that they're doing well. They're interested in attracting dividend buyers. So they're elevating the amount of profits that they dedicate to paying dividends. So that's good for us because we're exactly that type of consumer. And dividend growth is 7.13%. That is pretty good in my opinion. And that's just the rough range percentage-wise between each dividend growth. So this thing has three pretty strong factors. First, it's quarterly. I like those because they just kind of rack up. Monthly is good. I want to also mix them in, but that's what JAPQ is for. Good dividend yield annually. The main factors here are the good dividend growth. It's above 5%, and the payout ratio here is almost half of their profits. So there's, a reason why this is one of the most popular dividend ETFs out there. So let's go ahead and look at the holdings. So we can see here that everything is nice low weight. There's nothing that's like 20% or anything like that. It's not super top heavy, right? It's very well diversified. We can see a lot of this is pretty well split up sector-wise. You've got Amgen, you've got Cisco, that's tech, obviously. You got Broadcom, you got Home Depot, Chevron. So they got a little bit of everything. There's Pepsi, Merck & Co., Coca-Cola, Verizon, Texas Instruments, UPS, Pfizer. So they're kind of everywhere, which is pretty good. So let me go ahead and see what else they have in there, just in case they decide to increase their weight in a specific position. So I'm just going to see if there's anything down here. Best Buy is another one, I believe, that has a good dividend, or they did. It's been a while. I'll probably look at those for the next video, but Best Buy is one that we like to speculatively trade as well. So let's take a look here. And a good chunk of these do offer dividends, and this is also how they make money. Because if you've got 22 million shares of a stock, I'm not saying this one in particular does offer a dividend, but let's say Best Buy does, right? If Best Buy offers a dividend and they've got $3 million or 3 million shares in that, they're raking in some dividends, right? And then they're putting those dividend payouts into that profit category and using that for the payout ratio. So they're basically giving us some of the dividend from the other companies that they're holding, which is pretty cool. I like that. They pay taxes on it, we pay taxes on it, whatever, but we get our proportional amount, and we don't have the burden of paying short-term capital gains tax because we're not selling these. We're just collecting them and reinvesting those dividends. So it's the same thing they're doing. So we're just doing a smaller version of what hedge funds do. So that's why dividend investing is pretty important, and it's a pretty big part of any compounding passive growth. So nobody got rich by not using passive income. Okay, so you can see here the top 10 holdings are 40.73% of the assets. That's a big number, and that just means that numbers 1 through 10 here, these numbers here in the weight category add up to 40.73, which is good because we want the bulk of the portfolio to be in quality stocks. And these all look like they're pretty stable investments. A lot of these companies use like Coca-Cola, Pepsi. They're just too good. Chevron's another good one. Home Depot's pretty decent. Cisco's very good, and Amgen's pretty good as well. So a lot of good holdings in this one. I really do like it. So again, the plan for this coming month, when I get the next $500 contribution made, that'll put me up to $700 to invest. So I will take the roughly $350 that I have now, and then I'll double that, and I'll buy one more Johnson & Johnson, one more JAPQ, ideally, because that should put me up to the $200 range, and then I'll have about $150 left over, which allows me to get 2 of these guys, SCHD. So I can plan this stuff out ahead of time, and as long as things stay relatively stable within the next 10 days, I think we'll have enough to easily make that plan happen. So, all right, that was the end of this stream. I appreciate it, and I will, again, I'll try to upload these. I'd like to do one a day, but I have to make fresh content, and it's going to get a little slow. So I think for the earlier episodes, I'm going to focus a little bit more on education and strategy, beyond just kind of telling you guys what I'm about to do. And then you guys can all start working this into your own trading plans, and then not just relying on me. And again, I don't want anyone copying me. I'm just kind of showing you what I'm doing for insight. If you guys need help, you want education stuff, just make sure that you reach out to me. PBAlerts, obviously we have that's 100+ classes. We do live streams all the time. So if you're not in there, shoot me a message. We'll get you in there. And then if you guys are experienced and you have your dividend stuff, I'm more than happy to take a look at those as well. So this is definitely a collaborative project. I'm not just doing this on my own. I simply happen to be recording this on my own and making the decisions on my own. Doesn't mean that I'm not interested in feedback from you guys. That we thrive on that. So feel free to ask any questions, and I'll incorporate some of that education into these streams. All right, I will see you guys tomorrow. Just make sure that you guys keep an eye out for the Fed catalysts. We get some pretty big numbers hitting this afternoon, and I don't want to be part of that. All right, I will see you guys next time. Thank you. Bye.